Welcome to Aging Insight with your host, John Ross and Lisa Schollmeyer. This program is made possible by
Welcome to another edition of Aging Insight. I'm your host, John Ross, here in the studio with my co-host, Lisa Schollmeyer, as always. And you are listening to the #1 program related to your health, housing, finance, and legal issues as you're trying to navigate through those retirement years.
All right, well, Aging Insight, we are all about bringing you information into your living room so you don't have to go out and search and find it. You can, get it right there. It's really kind of a mission that we have to inform you so that you can make great decisions as you age in place and plan for retirement.
Yeah, so Lisa, as we meet with clients all the time, I would say probably the #1 thing that people think they need when they walk in, their concern is that they don't have a will or they want to review their will or something like that.
Yeah, that's the #1 question we get is about a will, but you know what, John? Let's not even talk about that today.
Nope.
So how about we go with a question #2 that we get asked the most frequently, and that has to do with, hey, I want to, what do I do to save my house so that my house passes on to my children and family? I don't want the state to get it. I don't want the government to get it. I don't want the nursing home to get it. You have someone who has paid off that 30-year mortgage. They paid 3 times what the house was worth by the time they paid all their interest payments and principal payments. And they want that land and their little piece of the American dream to go on down to their family.
Yeah, it's probably, for most Americans, that's one of the biggest assets in their net worth. And so it's logically something that people are going to be concerned about. And this is one of those areas where there's just a tremendous amount of rumor that has a little bit of basis in law, but for the most part, people's fears are unfounded just because they don't really understand. But this whole idea that if you ever go to a nursing home that you're going to lose your house or that the government's going to take it or any of that sort of stuff goes all the way back to the mid-1990s where the government passed a law called the Medicaid Estate Recovery Program. Now, when you end up having to need some form of long-term care, whether that's assisted living or home care or nursing home care, either you have the ability to pay for that privately, but that can get very expensive. So at $5,000 or $6,000 or $7,000 a month, most people can't do that. So the alternative then is to qualify for Medicaid. Well, back in the 90s, the federal government saw that Medicaid was spending a lot of money on these nursing homes. And so they decided that maybe they ought to try to get some of their money back. And so with this Medicaid Estate Recovery Program law that they passed, it basically turned Medicaid into a loan. So every time you're in that nursing home and Medicaid's paying that monthly bill, it's kind of like swiping a credit card, except, in this case, Lisa, unlike having a credit card with a monthly payment, this monthly payment, this credit card payment comes due at your death.
At your death, that's right. And before we go too much further, I want to make sure our viewers understand that we are talking about the Medicaid program paying for care, not Medicare. Medicare, John, that's folks have already paid for that through their withholdings and their paychecks, but Medicare does not pay for long-term care needs such as a nursing home. So that is when you were mentioning that the government got into paying for a lot of long-term care through the Medicaid program. And, with all that money flowing out, the government decided that they should try to collect and get reimbursed for that when the patient who was on Medicaid services died. That Medicaid recovery program means that most often the largest asset someone who has received Medicaid still possesses at the time of their passing is their home. So this is where the rumor about the government is going to get my house kind of comes into play. The government doesn't want your house from the standpoint, they're not in the real estate business. They just want to be paid back if you applied for and your care was paid for through the Medicaid program.
Yeah, and so, like so many things with law, words become very important. And one of the main words in this law is, it's called the Medicaid Estate Recovery Program.
Okay.
That word estate has a very specific meaning when it comes to your death and how assets transfer at death. So, for example, let's say that I've got a life insurance policy and I've got a good friend of mine, Stewie, and I want Stewie to get the life insurance, and so I name Stewie as the beneficiary on the policy, right? So the policy's got Stewie listed on there. Now, some time goes by, me and Stewie have a falling out, and maybe I've decided I don't want Stewie to get my life insurance anymore, but instead of changing the policy, I just draw up a will. And in this will, I say, well, I've got this life insurance policy, and I don't want Stewie to get it. I want all of my life insurance to go to my other friend, Sally. And I get the will signed and witnessed and all of the normal will stuff. And now, at my death, the question becomes, who's going to get this life insurance? Because the contract names Stewie, but the will names Sally. Well, Lisa, this is an easy one to answer, isn't it?
Well, sure, it's very easy because in this case, your beneficiary, your beneficiary, Stewie, gets the life insurance proceeds, and it doesn't matter that the will said that Sally gets the insurance because the contract controls instead of the will. So, John, what this means is the life insurance policy is not part of your estate.
Right.
Because it went through the contract. And this is, like you say, this is a very key difference, but it's time to take a break and we'll come back and talk about where your house fits into this issue for Medicaid estate recovery. We'll be right back.
Lone Star Truck Group is now hiring service technicians. We also have career opportunities in every department. With 23 locations across the South, work where you want. The best product lines in state-of-the-art facilities. Work with the best employees, receiving great benefits, competitive wages, and a safe, clean work environment. Receive ongoing product training for continuous career development. Contact Lone Star Truck Group today and recruit it at LoneStarTruckGroup.com.
Welcome back, everyone, to Aging Insight. I'm Lisa Scholmeyer here with John Ross, and today we are talking about saving your home. If you have a concern that the government or a nursing home or the state is going to get your house, this episode is for you. And we've started off talking about how this rumor about someone else getting your home besides your heirs and beneficiaries, John, that comes from the Medicaid program, that if the Medicaid program pays for care services for a senior,
That's right.
then the law requires the state to try to come back in and collect on those bills after the patient dies. But the program to collect is called Medicaid Estate Recovery. So before the break, we were talking about that the term estate is a very important term here, and we talked about an example where your life insurance policy does not pass through your estate or through your will, your last will and testament, because that life insurance policy passes pursuant to your beneficiary designation. So John, life insurance is not an estate asset.
That's right. The technical term for this is what's called a non-probate transfer. because it passes automatically at death. It's not part of the estate. And here's the key. Here's the big reveal in this whole deal. If it's not part of the estate, then Medicaid has no claim against it, because Medicaid has a claim against the
estate.
Right?
We
So
almost
yeah, so we're right back there to that whole thing about the estate. So the whole key here is, if you want to protect that house, all you have to do, I'm going to say all, like it's just,
it's a little more technical,
but
yeah.
all you really have to do, if you can hold this in your mind, is just understand that you've got to get that house so that it passes to your beneficiaries outside of your estate. It passes automatically, kind of like a life insurance policy would.
Sure. Yeah, and so most frequently, John, if people do nothing, okay, maybe they made a will,
Right.
but they did nothing else, and then they later had a need for long-term care, well, when they die, in order for their home to go to their heirs and beneficiaries, that will would have to be probated in the courts. There's an expense to that. There's a time requirement to do all that. So what we're talking about is there a way we can pass that house to beneficiaries without using a will and having that house pass through the estate through the courthouse process?
Yeah, we want to bypass all of that.
Yeah.
And there are ways to do it. Now, the way you do it becomes very dependent on the state that you live in, because some ways work in one state that don't work in the other. For today, we're going to be focusing on Texas and Arkansas. You know, if you live in Louisiana, they've got their own thing. If you live in Oklahoma, they got their own thing. If you live in New York City, they got their own thing. But we're going to talk about a couple of ways that work in Texas, a couple of ways that work in Arkansas, and one way that will work no matter where you live in the United States. So where do you want to start, Texas or Arkansas?
Let's start with Texas because it's the easier way.
That's true. All right, so with Texas, you actually have two different options here. The first one has been around for a long time, and this is where you do a deed on your property, and you say, here's who I'm giving my property to. So for example, I would do a deed that says, I'm deeding my house to my friend Stewie. But in this deed, I'm going to say that I retain the right to use it, live in it. I can even sell it and keep all the money, right? So I haven't really given Stewie anything, because at any time I could sell this property and keep all the money. And so this deed has been around for a long time, and it was actually created by a professor in a Texas law school. And when he created this deed and he wrote a paper about it, he said that imagine Ladybird Johnson wanted to protect her home because she was going into a nursing home. And ever since then, from that one paper, everybody has called this thing a Ladybird deed. And so if you were worried about protecting your home and you lived in Texas, one option would be to do a Ladybird deed where you're deeding the property to whoever you want to get it. You're just retaining all the powers that you already have. The right to live in it, occupy it, sell it, rent it, whatever you want to do with it as long as you're alive. But the very second you die, poof, it would belong to whoever you've deeded it to. That's not part of your estate, and Medicaid couldn't touch it.
Yeah, no, I love the simplicity of the Ladybird deed in Texas.
Yes.
And I guess there's only 2 states that allow Ladybird deeds, and that would be Texas and Florida.
That's right.
But so that was one way to handle the property in Texas. And there is a second way to handle Texas property. So if you own a house in Texas, you could do a Ladybird deed, or most recently, the Texas legislature has passed a new type of deed called a transfer on death deed. And it's very similar to the Ladybird deed, where you actually deed the property during your lifetime to the beneficiary you want to have it, but you retain all the rights to the property. The deed just goes on record that says, hey, when this owner dies, this property goes to the named person that's already named in the deed. And so you put this on file while you're living, but it does not affect your taxes. your ability to sell the property. So it's very similar to the Ladybird deed. One of the differences, however, is that while a transfer on death deed will definitely avoid that nursing home Medicaid estate recovery, where the nursing home and the government cannot come in and get your home, this transfer on death deed does allow other creditors, such as Visa or MasterCard or any medical bills, to come in and file claims against that home if you use a transfer on death deed. So, John, it's a probate avoidance tool, a transfer on death deed is, but you don't quite escape all the creditors.
Right. So, you know, between the two, for the Texas residents out there, I would say for the most part, the Ladybird deed is going to be a significantly better option than the transfer on death deed.
Yeah, that's always my recommendation.
Yeah, and the other thing is this transfer on death deed is relatively new law. It's relatively untested. Yes. And so whereas the Ladybird deeds have been around for a long time, we know those work. They've been used and there's a lot of different things that you can do with them. So with Texas, you've got the Ladybird deed, you've got the transfer on death deed, both viable options to protect the home, and neither available on the Arkansas side.
That's right. So we'll take a break and then we'll come back for our Arkansas viewers and talk about what you can do to protect your home in Arkansas. We'll be right back.
Lone Star Truck Group is now hiring service technicians. We also have career opportunities in every department. With 23 locations across the South, work where you want. The best product lines in state-of-the-art facilities. Work with the best employees, receiving great benefits, competitive wages, and a safe, clean work environment. Receive ongoing product training for continuous career development. Contact Lone Star Truck Group today and recruit him at LoneStarTruckGroup.com.
Welcome back to Aging Insight, and today Lisa and I are talking about how to protect that home from the Medicaid Estate Recovery Program. That claim at your death for all the money the state had paid for you while you were on Medicaid for that nursing home or in-home support or assisted living support. We want to protect that house, and we've talked about two ways you can do it in Texas, the Ladybird deed and the transfer on death deed. In Arkansas, it's a little bit different. You can't use those two, but you still have two different options.
Yeah, so John, in Arkansas, one option, well, let me back up. In Arkansas, the option that we choose really depends on where we are in our life cycle here. I mean, if we're doing some pre-planning, looking far down the road and saying, hey, it's time to do a will, it's time to do some planning, well, then there's one choice I'm going to talk about that we would use in Arkansas. If we're in a crisis situation where we need care and we're just about to apply for Medicaid right now, well, then that may require a different solution. So first thing in Arkansas is to figure out, are we pre-planning or are we in a crisis? And if we are pre-planning, then I would recommend that you use something called a life estate deed in Arkansas. And a life estate deed, John, sounds very familiar to the Ladybird and transfer on death deeds, where the owner of the property transfers the property and deeds it over to beneficiaries, to subsequent owners, but they retain the right to live in the property for the rest of their lives. And the key here is when that property owner dies, the real estate automatically transfers to those named recipients of that property. The problem, John, is that in a life estate situation, we are actually giving something of value away the minute we sign that deed.
Yep.
And so if you need Medicaid services right now, the fact that you just deeded away the future of your property is considered a transfer which would count against you if you needed Medicaid services right now.
Yep, I mean, basically, Arkansas is not going to pay for you if you have done this life estate deed within 5 years prior to applying for Medicaid. So that's what, they say, look, you have given away stuff. You can't just give away stuff and qualify for Medicaid.
Sure.
And so a life estate deed will work to protect the property, but as you said, this is a tool if you're planning well in advance.
Right, pre-planning. So if pre-planning in Arkansas and you think you've got 5 years or more before you need any services, then life estate deed.
That's right. Now, if it's a crisis situation, you've got to do something right now, there's another way to transfer property, and that is by joint tenant with right of survivorship. Now, you're probably familiar with this, although you may not realize it. If, two people go down to the bank and they open up a joint bank account, 9 times out of 10, that bank account is going to say that they own the account as joint tenant with right of survivorship. Now, think about this. 2 people go down to the bank. Person 1 deposits $50, but person 2 doesn't put any money in it at all. These 2 walk out of the bank, and person 1, the one who put the $50 in there, gets run over by a bus and dies. Well, according to that contract at the bank, the $50 in that account belongs to person number 2 because they're the only surviving joint owner on the account. So whatever's joint tenant with right of survivorship passes to whoever outlives the other. When we're talking about a house, one of the things that we can do here is we can transfer a small interest in the house to whoever we want to inherit it. So using my example earlier, if I want Stewie and Sally to get my house when I die because I'm headed to the nursing home, I could give them a very tiny interest, like 1%. I own 99%, so it's still my house. And the value of this 1% is so small that it doesn't really affect Medicaid. But now the 3 of us all own the property as joint tenants. If we do that deed so it says joint tenant with right of survivorship, then if one of us dies, it automatically belongs to the survivor. And the idea here would be that since I'm the one going into the nursing home, I probably have the shortened life expectancy. I'm probably deeding this to my kids who are much younger. And so I die. Their 1% basically becomes 100% because they're the only surviving joint owners.
Right. So if we're in a crisis situation in Arkansas, then we would consider using a joint tenant with right of survivorship deed.
Yep.
All right. So John, in Texas, we talked about using either a Ladybird deed or a transfer on death deed.
Right.
And our recommendation is generally for a Ladybird deed. And then in Arkansas, we talked about that if it's pre-planning, we would use a life estate deed, and if it's a crisis situation, we would use a joint tenant with right of survivorship deed. But you talked about there is a super solution that will cover you no matter where you live.
So my first appointment this morning, Lisa, was with a daughter. Her mom's been in the nursing home for about 4 or 5 years. She's been on Medicaid this whole time.
Oh, yes.
Now, back in the early 2000s, they did a life estate deed. Okay. So by the time mom needed nursing home, the 5 years had passed, no problem. But this house has been sitting there empty for 4 or 5 years now. They can't sell it because if they sell it, it would have cash and the cash would count against them. So the super solution to all of this, if you're planning in advance, is to create an irrevocable trust. With an irrevocable trust, you can actually create a trust that you're still in charge of, that you can still benefit from, and the title to your home can then go into this trust. You can keep your homestead exemptions and all of these sort of things. But if you've set up this trust correctly, then after 5 years has passed, the value of that home, and frankly the value of anything you have in that trust, would no longer count towards your eligibility for Medicaid. That means whether it's the house or whether you had a CD at the bank that was in the name of that trust, none of it would count towards your eligibility for Medicaid. This works whether you're in Texas, whether you're in Arkansas, whether you're in New York or California, it doesn't matter. These are very powerful tools. And like in the case I talked about earlier, Lisa, Had they done, instead of the life estate deed, had they done an irrevocable trust at that point, well, now that mom's in the nursing home and nobody's able to live in that house, they could sell it. The money would still be in this bucket that we created.
Available for mom.
Which would then be available for mom, and which could then pass down to the kids without that house just sitting there deteriorating.
Yeah, so I guess today, I know we've thrown a lot of legal jargon at you today, but we want you to know, get good advice. Don't just listen to your neighbors and friends. The rumors are just rampant out there about, saving your house or who could even get your house. But you want to plan in advance and get good advice. So there is a solution out there.
That's right. And of course, that's why you watch the show. Hope you enjoyed it, and we will see you next time.